Hello and welcome everyone to Gold Asset of the Day for the 15th of October, presented by myself, Phil Carr, at the Gold and Silver Club. So what do you need to know as we go into a new week here? Well, firstly, in the latest week, hedge funds and money managers, they have increased their overall net long positions in the latest week. In fact, this is something that we were anticipating after that end of quarter profit taking that we saw right at the end of September, which took gold prices down to $1,459 per ounce on the very last trading day of September. Subsequently, we did see that buyback in the market on the 1st of October. In fact, gold prices rallied over 600 points to the upside on the very first week of October after we saw the price action springboard higher off that end of quarter profit taking. And we were really looking for confirmation that hedge funds had bought into that recent dip, because over the last 2-3 weeks here, we have seen net long positions get reduced, but not in the latest week. So that's the first point to be aware of. Hedge funds and money managers, they have bought into the recent dip here on gold. Now, not only that, at the end of last week, we had a lot of positive sentiment in the market regarding a potential deal to be struck between the US and China. And of course, later on in the session on Friday, we did see that a partial deal had been agreed to, but nothing had really been confirmed or signed. And China is essentially due to go ahead with more negotiations with the US later on this month and into November. So initially, this optimism in the market, it did springboard higher the US stock market, and it put pressure on gold right at the end of last week. But in fact, that was another opportunity to buy back in right at the lower end of the ranges. October, typically mid-October especially, tends to be a consolidation period for gold prices. Now, many traders, they're getting trapped in selling gold right at the lower levels, expecting much more significant corrections, which we're definitely not seeing. And they're also FOMOing in, getting the fear of missing out each time gold breaks out. And that's not the right thing to be doing either. What you want to do is capitalize on these pullbacks. At the moment for this week, I'm looking for the lower end of the range to be sitting around the 1470 to 1475 zone. However, the upper end of the range, I'm not necessarily expecting the price action to get much beyond 1505, 1510 over the course of this week, trading within those ranges. However, you do need to make sure your entries are spot on and that you're willing to take profits off the table. Otherwise, you can get stuck in a lot of the choppy price action that we're seeing at the moment, which is great from a range bound point of view, and you need to be very nimble. And that's really the key at the moment to trading gold. Many of you have been in touch with respect to gold price action here, where you've been caught out on technical analysis, which is very much out there at the moment, which is maintaining that gold is going to have more severe corrections down to the 1400, and also bullish analysis, which is out there, which is of course calling for 1600, 1700 and 1800 gold, which we might well see later on in the year and as we go into 2020. But at the moment, you need to understand that as a trader, you need to be taking advantage of these shorter term ranges at the moment. So over this week and later on this month, there are a few news items that you need to be aware of. At the end of the month, we have the FOMC Statement. That will be taking place on Wednesday, the 30th of October. And of course, that can be a catalyst for big moves in the gold market. So we want to observe that news item to see what the Federal Reserve state in terms of monetary policy and future guidance. So we'll be paying a lot of attention to that at the end of October. Of course, on the 31st of October, is the potential deadline for Brexit now. We really want to keep a close eye on the summit, which is later on this week on Thursday through to Friday, to see if any agreements can be pushed through later on this week. This is really make or break on Thursday or Friday, the EU summit for the UK and EU officials to work out a potential negotiation of a deal during the course of these talks and the summit. So you want to pay a lot of attention to that, because of course anything positive which comes out of that can very much cause gold prices to sell off, because any positive narratives coming out of a potential deal on the table would cause gold to get less of the safe haven bid. On the flip side of that, if it looks like we're going to be headed towards a no deal Brexit, of course that creates a safe haven bid for gold, and you also want to pay a lot of attention to the potential safe haven bid for gold in that scenario. So definitely have that on the radar over the course of this week. And again, best way to profit from gold in these markets at the moment is to be nimble, taking your profits off the table at the upper end of these ranges and then looking for more opportunities as you see the price action come back within the lower end of the projected levels that I've just mentioned. So with that, that's been Gold Asset of the Day, and of course I wish you good trading.